Good morning. This is the video newsletter for buysellshort.com for Sunday, July 5th. Very ugly session on Friday. Dow down 200 plus points. Reason being the jobs report that came out. For some reason, no idea what it was, the expert economists only expected the economy to lose 360,000 jobs. And when the number came in at a common sense number of 460 plus, the market used that to sell off. To be quite honest, didn't even realize they had the number that low. My bad. I would have had us shorting the market on Thursday if I'd known they were looking for such a low ball number on the unemployment report. Just ridiculous to think that things were going to get that good or that much better so fast. I mean, the report was good. I mean, it's not good to lose that many jobs, but we're down significantly from the job losses we were seeing in the previous couple of months. So, still some positive trends out there. We're at the bottom of the trough right now. We're not going to go back into a V recovery. We're going to slowly build. And, these stupid estimates that expect a V recovery are insane. And what you see happen on Friday is what happens when they have just unrealistic expectations like that. Here we're looking at the Dow 15-minute chart. You can see we essentially ended up where we were last week, back down in the 8200s. Support is 8250. We're oversold on RSI. We're pretty much oversold on all the indicators. Let's flip over to the daily chart. We broke that newly drawn support line on the Dow daily chart. So let's see what happens tomorrow morning. 8250 is support. Just looking at this, if we don't see a bounce tomorrow, we're going probably to 8,000. That's just what's going to happen. We did get a golden cross on the daily chart. This is the first time we've seen this happen since 2005. I believe it was early December 2005. By January, the market or the Dow a month later was up 400 or 500 points. So it's not uncommon for the market to sell off after a golden cross, but the golden cross is actually more bullish on the 15-minute time frame than on the daily chart. Typically, when we see a big sell-off ahead of a long weekend, we had the noise from North Korea expecting to launch towards Hawaii. They didn't, but they launched a bunch of missiles. Long weekend, bad data. They weren't going to hold the market. A lot of traders weren't going to hold it, even though volume was low. Typically, what happens or has happened in the past when we see a sell-off before a major holiday weekend, we see a nice bounce back on the following session. So we need a bounce back tomorrow. Otherwise, we're going to be looking at a lot of shorts, and we'd actually prefer to see this market hold up at least through August. We do have a head and shoulders formation forming on the Dow. We have this left shoulder here that was a month in length. We had the head that was 3 weeks in length, and we've got the right shoulder that's forming right now. The reason I was saying that we're looking for August, we only got a couple of weeks right shoulder here, so expectations would be that we tread water in this tight range, 8,200 to 8,600, over the next 2 to 3 weeks before we see our annual sell-off. So, fingers crossed that we get that bounce this week. US dollar has been holding up pretty well over the last week. Every time it looks ready to break down, the next session it's green. It's just hugging this 20-day exponential. Indicators look ready to go. We do have the G8 meeting this week, so there's going to be a lot of dollar bashing by Russia. China's already said they won't bash it unless someone else brings it up, but expect the Russians to be bashing the crap out of the dollar, and that should help oil. But another caveat there. Oil chart here, big sell-off on oil over the last 3 days. We had a spike high and a breakout on Wednesday, and then since that almost $73 print on Wednesday, oil is down $8 a barrel. Late Thursday, the truth actually came out. The reason for this spike here last week to the highs that was shorted into and sold off was a quotation marks rogue trader in London illegally bought $10 million of crude oil futures that spiked the price up here, and the sell-off over the last 3 days was his fund closing out those illegal positions. So let's see what happens this week. Chart doesn't look that great, but like everything else, we've got a lot of manipulation in the mix here that will kind of skew things. SMH was pretty solid on Friday, Market was down big, Dow was down big, Nasdaq was down big, but the SMH was only off about 14 cents, which was not bad. And as I mentioned in the chat room, whenever you see the SMH hold up pretty well on a large market down day, most times the next trading session is up. So let's see if that holds true for this upcoming trading session on Monday. Stock plays: MTSN, cash rich semiconductor play. Breakout is $1.20. We're looking for $1.30 to $1.40 plus on this one. Very fat cash balance on this one, limits the downside, and that's what we're looking for in an uncertain market environment. DSCO was just an ass whooping on Friday. Stock down 50%. FDA asked for more data. Company is not going to continue developing this trial. They're going to focus on their other drugs. They've got cash. The stock got hammered. If you see the candlestick here, looks exactly like the candlestick we saw back in April. We're off 50% here. It's trading at 50 cents. No, we'll trade our way out of this one. We've already got nice gains that we've had here on all the spikes over the last couple of months. We'll do the same on this one again. Would look to average down here over the next couple of days, and then we'll just hold for the inevitable bounce back to the 70, 75, 80 cent area in the coming days. Just a little bit overdone. All the rats have jumped out. All the bashing has begun, and would expect to see this one bounce back in the next few days. BCON picked the wrong day to release monster news. DOE gave them their loan, $43 million. News came out after the market had started selling off. Just bad luck on the news release. But we should see nice follow through this week. These guys are the play on the electrical grid. They've got their money now, and the chart looks pretty nice here. Would enter stops at 80 cents, and breakout is $1.10 on this one. This would be your next buy spot on this, $1.10, and would be looking for $1.25 plus. If this news had been released after hours on Thursday, or pre-market on Friday, or after hours Wednesday, pre-market on Thursday, we would have been looking at this stock at $1.25. So that's our target on this one near term. Very nice buying volume. I mentioned on the alert on Wednesday that gut feeling told me news was coming, and voila, here we have news. Stock was up 25% from that alert on Friday. CPST, this is a sympathy play. If Beacon runs as we expected to on Monday and Tuesday, these guys should easily make a trip to the 90s. Stops at the 50-day moving average at 78 cents. As you can see on the chart, RSI nicely oversold now, and we usually look for it down here on a chart like this for a nice big breakout. mRNA, this is our biotech play. We did a trading alert on this one on Wednesday at $1.30 something, and first target was $1.60. We hit our first target on the nose, traded as high as $1.61. Market slapped it back down again on Thursday, so we'll be looking for this to continue to move higher. Breakout is a close above the 20-day exponential, and we're looking for $1.80 plus on this one in the near term. Seeing as the market is on shaky ground, we're going to throw out some short watches right now. CTIC, Cell Therapeutics. This is the biggest piece of crap biotech company there is. Got a nice little head and shoulder formation forming here. This is a cancer biotech that has that $800 million market cap, including debt. For a drug that has yet to be submitted to the FDA for approval. As you can see, target on this one, if you've got patients, I even think this is an unrealistic target, as in it should be a hell of a lot lower, but this stock should head back below 1, especially when we see a sell-off in this market in the next couple, in the next few weeks. Breakdown is $1.50, first target $1.29, the 50-day moving average, $1, and then 60 cents on this one. Piece of crap. Stops on this would be $2. It should not be trading up here. Apple, APPL, or AAPL, double top formation on this one. If it's anything like the Dow and we do see a sell-off, this one should trade back to $1.25 to $1.30. Goldman Sachs, another one, double top here at $1.50. First target would be the 50-day moving average, $139, and then $125 to $130. So not a whole lot of new plays going into this week. Let's see what happens tomorrow. If we end the week down this week, the game is over. The sell-off is beginning earlier. I'm thinking and hoping that we see a bounce back and we continue to trade in this trading range of 82 to 86. So that's it for the video. See you guys in the chat room tomorrow. Good night.